So recording is on. Welcome to BMGT 443 Equity Analysis for the Spring 2021 semester. My name is Joe Perfetti. I will be the professor. And basically, as we get started today, we're going to do a little bit of an intro to the class. We'll talk about some of the content, beginning on lecture note 1, and give you an overview of some of the things you need to get started with the Bloomberg terminal, which is going to be a key requirement of this class. Obviously, as you're probably aware, this class is going to be done online for the semester due to the virus. So we will be meeting primarily in Zoom. When we meet live, you will be working virtually the rest of the semester in Teams. And there will be some asynchronous classes doing work, but the synchronous classes will be in Zoom like they are today. So as we get started, I just want to give you a few things about the class and the syllabus. So I'm going to go ahead and share my screen here. So again, we're going to be focused on equity analysis this semester. And if you click on the syllabus link off the main page, you will see that I am teaching 4 sections. Basically, they run consecutively on Monday, Wednesday. This is the 11 a.m. section. I have another one at 2, 3:30, and 12:30. So it's actually 11, 12:30, 2, and 3:30. I know I got out of order there. Basically, that's my email address. That's my phone number. It's also an iPhone, receives text messages. We won't be on campus. So basically, if we need to do office hours, it'll have to be virtually online. I will have 4 teaching assistants this semester. They have all taken the class before. These are actually undergraduate teaching assistants. So they have been in your shoes. They know the content. They did well in the class. And I strongly recommend taking advantage of them. They will all have Zoom virtual office hours. Each of them is assigned to one of the 4 sections, but the content's the same across the 4 sections. So again, you're welcome to talk to them during any of their office hours. And as I said, 3 of them took the class last semester, and a DT was also a TA last semester. So she's carried over and was a previous student 2 semesters ago. So a DT is your TA primarily. And what that means is the TA assigned to your section is primarily responsible for grading. They will be grading all of the homework assignments throughout the semester. And so if you have any questions about grading, start with them. I'll referee if there's a problem, but they have the rubrics. They're applying them consistently as we go through the semester. Generally, grades should be done within about a week of submission. That's the overall goal. And that is their contact information outside of office hours if you need additional assistance with the content. What equity analysis is really focused on is to start to help you understand how an analyst of Wall Street would evaluate a company. And there's going to be kind of 4 sections to the course. The first one is kind of an external understanding of a company, because about half the performance of any company is the industry it's in. So what are some of those external factors that we need to understand to look at a market? Secondly, we need to understand the past to forecast the future. So basically, we're going to have a framework for understanding companies on a cash flow basis historically that I will introduce you to based on some work from the consulting firm McKinsey. Third, we're going to focus on valuations, and you're going to do enterprise DCF valuations of real world companies this semester to understand not only their intrinsic value, but to understand how to write a buy, sell, hold opinion and to come up with ranges associated with how high and how low a company can trade. And fourth, we're going to talk about multiples as a way to look at alternative valuation. Although again, we will sync it up with the DCF and understand the principles behind a multiples, also known as a comparable analysis. Those are the 4 main sections of the class. Expectations are relatively clear, but I'll say a couple things as we get started that are very important. I kind of look at things like the golden rule. Number one, I'm going to treat you like adults, right? So basically, that means a couple of things. One, we take deadlines very seriously in this class. So basically, if you can't meet a deadline and you don't submit it by a deadline, you're not going to get credit. Even in a COVID world, we're going to basically push deadlines are important. So if you run into a situation where you can't meet a deadline, then you're going to find that we are flexible before deadlines. We're less flexible after deadlines. Okay. So if you need an extension, talk to us before the deadlines. The TAs are empowered to also get extensions, but they have to be in writing, nothing verbal, and they have to be in an email. And generally university approved. And obviously, in the time of COVID, if you're sick, we're going to be very accommodating. It's not just university policy, it's the right thing to do. Hopefully, no one will be sick, but realistically, if you do contract COVID and you do need some extra time or any other assistance, just let us know. We'll be as flexible as we can to try and help in the policies. Outside of that, again, if you're going for job interviews or other things and need more time on the assignments, basically get to us before the assignments with the request as opposed to after the assignment deadlines. Okay. Because basically, let's say that I have an interview on Wednesday, I can't make the class, need more time for the assignment. And so basically you ask us, we'll probably most likely give you an extension. If you tell us that you missed the assignment because you were at an interview on Wednesday's class, we're really sorry. We're going to basically say, we hope you got the job, but we're not going to give you an extension. We're not going to give you credit. So basically anything after a deadline gets a zero, just isn't going to be graded, obviously. So secondly, in terms of attendance, generally we're going to look at attendance in context of opting out of the final exam. But if you attend any of the sections, that's reasonably fine because I have 4 different sections. You can also sort of watch them on video if you don't want to attend. You just won't be able to opt out of the final exam. But for purposes of the opt-out, when you do come into the class, I do request that you use your name in the box and as much as possible, turn on your videos, like to see as we're talking to people. But regardless, if you don't turn on your videos, at least when you do participate, feel free to jump in verbally. You don't have to worry about text, but basically want to try and get some participation because I know Zoom is not ideal for that, but we're going to do our best on that. So again, you kind of read through what the requirements are here in the class. But the other big one that I want to mention is that essentially you're going to be doing a lot of group projects, and group projects are going to represent 50% of your grades. Okay. So about half is going to be teams, which are going to be starting to assign this week. And you're going to start working on your first team project next week. Okay. So the team projects are very important this semester and you need to take those seriously. So again, I'll be randomly assigning you to a team. So check in on that by Wednesday and essentially start reaching out and connecting with your teammates. And the last important thing is how much this class is going to be tied to Bloomberg. More than anything else you've taken at Smith, this is probably the most real world class that you will take. Every class will be talking about what's going on in the real world and using real world data and examples. It will be messy because we're going to take academic frameworks and try and fit them into the real world to explain things. But that's what the class is ultimately going to be about. And again, if you don't know Excel, by the end of the semester, you will know Excel. Okay. And in terms of the assignments, I just want to be very straight with everybody at the beginning of the semester. There's a lot of work in this class, even in a time of COVID. I know we've seen some messages from the dean that like, all right, lighten up the workload, don't put too much stress on students, et cetera, et cetera. That's not this class. If you're taking this class, you're taking this class to learn. If you're looking for a gut class and you don't really want to do any work, we're in the drop add period. I'd strongly recommend dropping this class because there will be an assignment every single week at a minimum. There will be 5 group projects on top of those assignments, and they build upon each other. And if you don't do those assignments, you will be lost in the class, right? There will be 1 midterm exam, And there'll be a final exam, which last semester about approximately 75 to 80% of the students opted out of, which you'll have the opportunity to potentially do that as well. But again, you'll get out of the class what you put into it, but I do require a lot of work throughout the semester. So I want to be very clear about that. And again, you'll also need to become Bloomberg certified. This is something that if you go to Wall Street, you'd actually be using the terminal every day and you'd have to be certified. So you get a leg up by doing it here in this class. Okay. So continuing on, the other thing that's important, I want to be very clear about the guidelines for this class is that when we grade things, data matters, okay? Because essentially, particularly in a finance class, if you just make general statements, they don't count, all right? And I just be very clear before you start doing your first graded assignments, what I mean by that. So let's just say that we talk about, and I'll give you an example in a few minutes, but we're talking about the spread of an industry. And you say, well, the industry spread is positive and this company is doing better than average. Even though that statement might be technically correct, you will get a 0 on your assignment in this class, okay? Because there's a 50-50% chance that it could be better or worse. And you could flip a coin not knowing what the right answer is and basically tell me what the right answer is. So in this class, instead of using that statement, if the ROIC was 15% and the WACC was 8%, and that was the screenshot from Bloomberg that you had to support that, then with the screenshot submitted, you would say the ROIC was 15, the WACC was 8. The difference between the two was a 7% positive spread, and that is why the industry was attractive. That would get credit in an assignment in this class. So what you'll find is that to get credit in this class, you must use numbers in everything you do, both verbally and in writing, and without numbers, just a bunch of words doesn't get credit. I don't care if you write 5,000 words. I'll give you a 0 if you don't use numbers and if you don't have correct answers with the data. Okay, so back to a few more things. We are now using the 7th edition of the valuation textbook. It came out in, I think, August 2020. So anybody with a 6th edition, return it. You're wasting your money. The editions were completely reorganized. The chapters are completely different. But basically, that is the textbook that we are going to be using. It's the 7th edition. You're going to be in project groups, and one of the group projects is going to be the Bloomberg Trading Challenge, which will start next week. And basically what's going to happen is using the Bloomberg terminal, you will have 2 6-week sprints where you'll start out with $1 million, hypothetical, and you'll trade real world equities. And basically it's a trading competition. Whoever gets the highest value at the end of 6 weeks gets an A. Whoever gets the lowest value at the end of 6 weeks gets an F. It's force ranked across the teams, 6 teams in each section. And it's basically 10% of your semester grade. So hand up from Jonathan.
Yeah, how are you doing? Are you allowed to trade like options and stuff too, or is it?
Well, the answer is you're technically allowed to do anything because it's a Bloomberg trading terminal, which allows you to do anything in the real world. However, for purposes of the competition, I restrict that to trading equities, or you can also trade ETFs. So some teams were playing around with some triple levered ETFs last semester. So that is allowed, but no options, and actually no day trading. We'll talk.
Oh, you can't day trade either?
Well, you can. I've just disabled it.
Oh, okay, gotcha. Thank you.
So basically, if you buy it today, you can't sell it till tomorrow. So there's a 1-day holding period on stocks. But again, it's actually probably the most interesting thing you'll do because it forces you to pay attention to the real world. And again, gets into real world principles like why are people trading Gamestop to a level that doesn't make any sense right now? And what do you want to do about that? All right. So grading. Grading is based on accumulating points through the semester. It's not like most of your other classes. So if you do poorly on one assignment, it doesn't matter as much. It's the accumulation across all of the assignments. So what you're trying to do to get an A in this class is you need 90 total points across 100 in the spectrum to get an A minus and 93 to get an A, okay? So here's how the points are distributed. 5 points are the Bloomberg certification. You have to become Bloomberg certified in this class. And you're going to have to do that in essentially 3 weeks. Okay. And it's going to take about 6 to 8 hours to become certified, but you will have to do the certification. That's 5% of your semester grade. 40% will be the non-Bloomberg Trading Challenge projects. You'll do 4 10-minute presentations as teams, each worth 10% or 10 points of your semester grade, which cover the 4 major sections of the class. 25% of your grade will be homework assignments, approximately 1 assignment worth 2 points every week for the next 12 weeks. There'll be 1 midterm exam, which is worth 10% of your grade halfway through the semester. There'll be the Bloomberg Trading Competition, which you'll do the $1 million sprints, 5% each half of the semester. So we'll reset the competition to 0, and you'll start again with $1 million fresh for the second half of the semester. So if you completely screw it up in the first half, you're not out of it. You can always go back and do better in the second half. That's 10% of your grade. And then 10% is a final exam, which you have the ability to opt out of. The other thing that matters here, beyond you need to follow the honor code, you can read all of this, and the late assignment policy, which I talked about. Special needs, if you have any, if you're now back on sports teams, or you have some sort of extra time on assignments or exams, please let us know. Send me an email, talk to the TAs. But the final thing I want to mention is what I'm calling the homework assignment replacement and final exam opt-out. Basically, I'm giving you 2 things that could help you relative to the grading of this class. Number 1 is the ability to opt out of the final exam. If you basically attend class, and you can read the attendance requirements, if you attend class and you get a minimum grade on all of your assignments, and you don't miss any individual assignments, and turn it all in, then basically you don't have to take the final exam, and you just get a free 10 points, right? If you miss any assignments, or you miss a minimum grade on an assignment, then you can't opt out of the final exam. But there is one indulgence. And so the idea is we're all going to make mistakes. So there's a homework assignment replacement, which is basically a 500-word paper, which you can write at any time this semester. And if you write it, it will replace any one individual assignment. It will not replace a group assignment, and it doesn't replace an exam, but any one individual assignment. So let's say you don't do homework 2. You just don't want to do it, forgot about it, overslept, dog ate your homework, whatever, and you just got a 0 on it. So you can at some point write the 500-word paper, and it's as if you turned it in and got full credit. Okay. So essentially, this is the one assignment forgiveness, which is available to any student this semester. And again, you can turn in this paper pretty much any time until the second before last week of class. You can see where the deadlines are on the assignments. So again, if you miss more than one assignment, we'll actually give you the one that has the greatest points associated with it relative to your score. But you do have the ability to use that. And again, it also forgive any issues relating to the opt-outs. Okay, and so again, you can see all the assignments have essentially and deadlines have been posted throughout the semester. So if you have any questions, don't hesitate to ask. The other important thing is I will be recording all the classes, including this one. And technically, this semester, I heard that they're available on Panopto, but I don't like Panopto. I think it kind of sucks. So what I'm planning on doing is posting at least one of the videos to YouTube. So I have a YouTube channel, Joe Perfetti or YouTube/Joe Perfetti. I'll post a link in the announcements, and you're always welcome to watch a video if for some reason you can't make class, or if you make class, you wanted to go back and see it. So I would also recommend you can consider subscribing to that channel. And so that way, whenever I post new videos for the class, they will be in your feed, so you will know those. So again, I'll make an announcement with that link, but you will see them there. All right, files. Basically, these are the files that I've been posting that we're going to be using throughout the semester. The one that's relevant right now is lecture notes. These are the lecture notes we're going to use for the semester, including lecture note 1, which is what we're going to go over here in a couple of minutes. Okay? And under people, like I said, on Wednesday, we'll talk about putting everybody into teams, but we will be in teams coming up. And again, a lot of this class is going to be based on Bloomberg. So before I get a lecture note, let's talk briefly about Bloomberg. So I'm going to share my screen again. So for those of you that may not have used Bloomberg before, this is called the Bloomberg, or also known as the Bloomberg Terminal or Terminal. And Bloomberg is Michael Bloomberg's company. He is the former mayor of New York and is a billionaire because of this company. And it was founded back in the 1980s with the general idea that Wall Street needed a trading platform, and they needed a real-time data platform, and they needed to crunch a bunch of the numbers in a consistent way. And so what Michael Bloomberg did is he kind of went to all the Wall Street firms and said, hey, I'll connect all of us. I'll give us all the same data, real time. We'll all agree on the formulas and the formats, and I'll essentially become the platform we can all use. And now they are the standard. They have approximately 320,000 users, but basically they are the critical users at Wall Street. And if you literally work on Wall Street, this is the software that you use. It's really expensive software. It costs, the base model is $25,000 per user per year on a subscription basis. So you do that times 25,000 users, you see why they make a lot of money. But most importantly, your access to this software is free as part of being a University of Maryland student. If you were in the lab on Van Munching Hall, you can see the building behind me on my camera here in Zoom. But basically, if you're in the lab in the third floor, we have 32 terminals in that lab. And we would actually be sitting in front of those terminals as part of taking that class. Now, because of the virus, no one can go to that lab. It's been shut down. So what Bloomberg has done through their disaster recovery services is they've given you the ability to access this online. So basically, it's remote access. Now, you can't download and install the software to your local computer. Well, let me rephrase. You can actually go to bloomberg.com, download the software, and install it. But then it's going to ask you for basically a serial number for that software. You're not going to have it. You're going to call Bloomberg. They're going to ask you for $25,000. So what you're going to have to do, and some of you have already started this, is in order to access this terminal, there's a process, and I've set it up on a Google form. So if you go to the announcements and you click on that Google form, you'll give me through that Google form, basically the name and email address that you'll use to register for the Bloomberg terminal. So what you'll do is you'll go to basically, I think the website's like portal.bloombergforeducation.com. Just click on the link. Make sure I'm doing this from memory. And then basically it's a two-step registration process. Step one is you go in as a learner and you register for the Bloomberg terminal. And it'll stop you in the middle. And it'll say, you have to wait on your instructor. I get a notification. I then go into my portal and I click a button that gives you access. Once you have access, I'll then notify you, of which I've notified 17 students already this morning, that they can then go back to that same portal and complete the registration. So basically the first time you go in, you type in your name and email address, and that's pretty much it. And then once you're authorized, you go back in with that same name and email address. You'll choose a login to the terminal and a password to the terminal. And then you can go to the other link and get directly to the screen once you log in that I am seeing. Okay. And so this is what we're calling the terminal access. And part of this also involves getting something called BMC certification, which I will talk about in a few minutes. But you're going to have to get trained on this terminal because the interface leaves a little bit to desired. It was designed in the 80s, and a lot of it is keyboard. And part of it is they're kind of trapped by their design because since Wall Street's been using this for decades, and they've kind of built so much customization around it, it's hard to completely change everything. So they make some incremental changes over time. But it is a text-based terminal. And just as you're playing around with it up top, there's a Google-like search bar where you can start telling it what to do. It's got some limited Google functionality, but the most important thing is it's keyboard based and it works on keys. So for example, one of the screens you might want to go to, this is what traders start the morning with every day, is this screen called Daybreak. And so to get to the screen, you would actually type in, if you look in my upper left-hand corner, DAYB is the short code. Or if I were to type in Daybreak, then it will show me that this is the Bloomberg. It's called function. And then you hit enter and it brings you to the screen. And so what Daybreak does is it literally gives you kind of like your cliff notes of what's going to happen for today. Okay. So today they're telling traders, think about a potential tech rally. Here's some companies in the news. What do you need to know? Merck had some really bad news on a COVID-19 vaccine. Talking about some things that are going on with the marketplace. Gamestop, what's going on with the short sellers is crazy. We'll look at that in just a minute. So some company highlights, some general interesting information, what's going on in the industry, summary of all the information, etc., all the way down. Okay. So again, this is one of the first things that people will look at every morning. Second one they're going to look at is the news. So you'll go to TOP. I want to write down a couple of these codes to remember yourself before you get certified. And literally what Bloomberg is doing is it is scouring all the news and it's real-time feeds and it summarizes them for you right here. And it basically says these are their picked main stories, featured stories. Eventually you can customize some of this, but this is what's going on. And this is the second things hit the wires. They're here and available for you to see. And it's all business, political news today. Let's see what's going on here. Anyways, then you might want to see what's going on in the market, WEI. Look at the world equity indexes. So here's what's going on with the markets around the world. And basically you can get real-time information. So not a good day for the markets. The Dow's down 1%. Already this morning, the S&P's down 0.6%, NASDAQ down 0.36. So that might be something we can start to talk about. Why are these markets going down? So if we start with the S&P 500, I can type in SPX is the ticker symbol for the S&P 500. Down here, these are the functions up top. Bottom half of the screen is the security itself. There's actually a security for the S&P 500 index. If I click on that, it brings me to that security. So this at the top is a real-time price, and then data available on the index I can get here. So the one I'm going to click on right now is the map of the market, IMAP. And so what this is going to do is it going to basically graphically tell me what's happening to all the stocks in the S&P 500 by sector. So I can see the overall market is down by 0.65, but what sectors are actually going down the most? Well, financials are down 1.8%, industrials are down 1.41%, healthcare about break even. Actually, technology hardware is actually up a little bit. Well, if I want to see which financial firms are going down, these are the different sectors of this. So I can click on this and these will tell me, well, insurance is down 0.75, banks 2.47, diversified financials. So it's really banks that are going down. And if I click on this, it's really the diversified banks as much as the regional banks. And if I click on this, here's the regional banks. So again, get a sense, if I'm trying to understand what's starting to happen in the market, what's driving the market, I can actually get to the data on the marketplace. And so again, a couple things to think about at Bloomberg, Daybreak, news, world equity index. And in this case, I'm drilling into the indexes. This is the S&P 500, started out with a graphical version, and then I'm getting down to look at stocks. Another thing you're going to be using Bloomberg, as I mentioned, we saw GameStop is in the headlines. So I'm going to look up what's going on with GameStop. So again, if I start typing in the ticker or the name of the company, the ticker symbol will pop up down here. And the format for Bloomberg is GME is the ticker name. US means it trades on the US market, trades to New York. And equity means you're looking at the equity part of the stock. Corp means you're looking at the debt. So for anybody interested in fixed income, that's called Corp in for corporate securities. That's their lingo. Equity is the stock. So if I go to the stock, Again, this is the screen. Trading has been halted on GameStop. Okay, I wonder what's going on with this company. So one of the things that we can look at is here's a GP, so I can graph the price. And if you haven't been paying attention, I'll do the last 30 days. But GameStop has seen its share price going from 20 to 120. And then today, it's down to 88. It's been going crazy. And obviously it was just halted. What's interesting is there's something called the analysts on Wall Street. These are the sell side analysts that write the buy, sell, hold opinions. ANR gets you to what's called the Analyst Rankings. And these are the actual analysts that are writing the buy, sell, hold opinion on a company. Okay. And so, for example, it's of Credit Suisse, Seth Sigman of Credit Suisse, who has an underperform, which is a sell. It says the company's worth $3.50. Stephanie Wissink of Jefferies says it's a hold. It's worth $15. Baird, Colin Sebastian of Baird has a hold worth $13. These are the buy sell holds. So what's interesting is none of these analysts that are covering the company say buy, 4 say hold, 4 say sell. Okay. And they all put in their 12-month price targets for what they think the stock is actually worth. $14. This company is trading. Well, it just started trading again. It's up another $30 to 97. The stock has gone crazy. Now it's back up to $100. Wall Street think it's worth 14, which basically says they think it could go down 84%. It's actually the most shorted stock right now in the marketplace, and it's having a short squeeze. Somebody's manipulating this, but the point is, and we can actually start to see GP, what's going on. I'm going to do the 1 day. But you can see today, it traded as high as 160. It was down at 80. Now it's down around 100. And Wall Street think it's worth about 13. But in any event, these are the types of things that we'll be dealing with this semester to try and understand what is going on with the frameworks, because basically this is the stock is a little bit frothy, and long term is probably heading down because the fundamentals don't support it. Wall Street thinks it should do this, but somebody's manipulating this. But anyways, again, you can kind of see all of this in real time in looking at the marketplace. So the other company that was in the news today is Merck, MRK, US equity. And so again, you can see their virus candidate for COVID-19 was withdrawn, basically said it didn't work. And so as a result of it not working, their stock price is down a little bit, not as much. If you want to actually read the news, you can go down here to individual company news or CN, and then read the news about what's happening in Merck, where they abandoned their vaccine, shut down their trial, and decided to repurpose their efforts because it wasn't actually working. They had a single shot vaccine based on essentially what they said, if you read these news articles, is that Merck was actually using dead virus to try and create a vaccine, where Moderna and Pfizer are actually using genes to sequence something to actually go attack the vaccine. And the dead virus approach just wasn't working on this virus. The virus was evading it, and it wasn't actually getting the immune response. So if nothing else, we now know that as a data point, but regardless, it was really disappointing news, not just for Merck, but also what's going on. Matter of fact, one of the other things you can do is you can go to VRUS, which is virus, and Bloomberg actually has a screen, which is the virus portal. So from Wall Street's perspective, what's going on with COVID-19? And they just integrate all the data here. In fact, through this, they have graphical things. You can see where infections rate, where death rates are, et cetera, by country. They also have data on the vaccine, who's been vaccinated, how much, et cetera. You can drill down on all sorts of things associated with that and resources that you can get about that. So again, just information availability in Bloomberg. This service has about 30, I think it's 36,000 screens, and it has 1 million companies of real-time data in the database. It's overwhelming. You're not going to learn all of it, but in order to use it, that's why I said you need to start to get certified. So back to this, we're going to be relying heavily on this product throughout the semester. Almost all your assignments after this week are going to be requiring you to use this product. So you're going to need to not only sign up for it, learn how to use it, but you got to get certified on it. And so you also have to be using some data from Excel that will come from it that will help us when we do our valuations. So I'm just giving you a preview of where we're kind of going this semester. And to me, I find this very interesting because, like I said, you get a really good understanding of what's going on in the real world. But as I said, you get a little bit of a learning curve that you will have to go up. All right. I've been rambling for a while. Pause, questions about any of this? Comments?
Yeah, hi, I had a quick question.
Yep.
Could you just repeat what WEI takes you to?
World Equity Index.
Okay. That's what I
And
thought.
so that, if you want to see not just what's going on in the US markets, all the different markets is just like a dashboard of what's happening.
Okay, perfect. Thank you.
Yeah. As a matter of fact, I'll give you another one we're going to use. We're going to go to ECFC, which is the economic forecast. So if you want to know, like, what's the forecast for GDP for the next 3 years, what's the forecast for consumer prices, both historical and all aggregated for you. And the nice thing about Bloomberg is I can drill down. In fact, I'll show you. I'll go back to Merck here for a second. If you go to FA from a company, stands for financial analysis as opposed to for financial statements. So these are the historical statements. So you don't have to go to the Edgar database to get the 10K or 10Q. Like literally within seconds of them releasing it electronically, the data is filled out in Bloomberg. And so one of the nice features of Bloomberg is, again, if I go to their income statement, you not only see the income statement that they reported, you actually see the adjusted one that analysts want to see. So Bloomberg puts it into a format that the analysts would actually prefer to see, as opposed to the one the company does. So they standardize it. But here's what's most important. If I want to go here to revenue for Merck and I click on this, then it tells me how they calculated the revenue that's actually in the database. And if you click on the document, it actually brings you to the actual filing that they got the data point for. So the other nice feature of Bloomberg is that not only do they give you the data, but they kind of show you data transparency of where the data came from if you ever need it in terms of searching for things. There's no other data service that does this. And so again, just another benefit that we're going to do. And so my point here today is just to kind of get you the idea that this is why you kind of need to sign up and get certified. So let me talk about certification. So there's 2 parts that you need to do, and both of these require separate accounts. Okay. So one account that you're filling out the Google form for is to basically get the account to log in to be able to access our terminals remotely. Okay. So that's the first thing you need to do. So you can do what I'm doing and start to do your assignments and research data. And that's a nice resource for you, just because, again, you can use it not only for this class, but technically you could use it for other classes, right? But number 2, there's a certification. Okay. And this is a real world certification, which you can put on your resume. And I wouldn't put it on your resume until you're certified, because if you do interviews, people start asking you. They'll say, all right, what's the code for WAC? That's almost like a trick question, because if you type in WAC, it'll give you a real-time WAC for a company. So there's Bloomberg's calculation of Merck's WAC today. But the point is, they'll ask you these codes, and if you don't know them, then they'll realize very quickly that you're not certified. But in any event, you can put that on your resume. It helps for the interview process. But number 2, and this is key, for Bloomberg certification, you need to take it as a separate login. It's called BMC, and there's 2 ways to do it. One way is to take it on the terminal. So when you're in your Bloomberg terminal, you can actually type in BMC for Bloomberg Market Concepts. And this is where you can sign up to get the certificate, which is right there, PDF that you can also put as like a LinkedIn badge and stuff. But the point is, you get the certificate after completing the certification. So what is the certification? So the certification involves 4 modules: economic indicators, currencies, fixed income, and equities. Okay. Now, the ones we care most about in this class are economic indicators and equities, but I am actually requiring you to complete all 4. Okay. Because I want you to know the terminal. And if you're going to do half of it, you might as well do the other half. Now, they're saying it takes about an hour to go through this module, an hour to go through that module, 3 and 3. So that's, you add them up, 6, 7, 8 hours to complete the Bloomberg certification. Now, when you're going through these modules, they're asking you multiple choice questions, and those questions are being scored. If you don't get 70% correct on those multiple choice questions, then you don't get credit for the certification in this class. So I want to be really clear that you can actually go through and not answer all the questions correctly and still get certified by Bloomberg. I have a higher standard for the 5% of your semester grade. So 2 things have to happen. Number 1, you have to complete the module, and you have to get 70% or more correct on their questions, because they're going to give you a percentage of that score. If you get less than 70% on any one of these 4 modules, you get a 0 for your certification. So you need 70% on all 4 of those, and it's all 4 or nothing with the 70%, or else you don't get credit for the certification. And that's due by 2 weeks from Friday. Here's the final thing. You can only take the questions 1 time per email account. So what ends up happening is, if you go in and you just breeze through and you jump to the questions, you try and answer them without looking at the content, I can guarantee you will score poorly. I tried that. Like, they actually make the questions based on the content. If you didn't read that content, you're probably not going to answer those questions right. Okay. So here's the point. If you don't read the questions and do the content, you're not going to do well. And if you don't do well, you can't take it again. You can only take it 1 time. And so if you get less than 70%, you breeze through it, kind of screwed for your grade. The only way to make up for that is you have to create another account to take the BMC a second time with a new account, but you can't use the same email address. So you'd have to have another umd.edu email address that you'd have to log in with in order to take it a second time. So what I'm just telling you is, when you take the certification, take it seriously. If you actually watch their videos, read their content, the questions are not that hard, but nonetheless, that is part of your grade. And you're going to spend a lot of time on this in the next 3 weeks. There's 2 ways to get the certification. 1 way is through the terminal. So again, there's 2 parts to this. You actually have an account for the terminal, minus Perfetti. And then you have an account for the certification. Mine's Perfetti at umd.edu. They're different. So in Bloomberg, I create a separate account, sign up for the terminal. Okay. Now, when I log in, I can take the certification, etc. There's a second way to become BMC certified. The second way is to do it on the web. Okay. And so when you created your terminal request through the Google form, when you go to that page, on that screen, it will ask you if you want to become Bloomberg certified. So I'm going to go there right now. So Chrome. Sorry, sharing my Chrome screen. Go. So if I go here, I assume you're seeing my Chrome screen, right? Portal Bloomberg for Education. Just I hope you're seeing this. And I go to the Bloomberg for Education website. And I go to BMC login. Then this is, actually I'm logged in. Let me log out. Sign up. When you sign up here as the learner, email3@umd.edu.
I don't think you're sharing the right page.
Yeah, on our end, it still says manage terminal access.
All right, let me try this again. Share. Thank you for pointing that out. Share. This one?
I can see it. Yep.
Test. All right, so I just made this up, okay? All right, so here's the point. When you logged in to request your access to the terminal, right? If you use a umd.edu email, access to certify through the web is free. If you don't use a UMD email, they charge you $149. You don't want to pay $149. There's no reason to pay $149. So one of the other benefits they're giving us at the University of Maryland, which is why you have to use a UMD email and say that you're part of the University of Maryland, is that they will give you a rate of free for certification through the web. So you don't even have to go into the Bloomberg terminal to get certified. Now, if you go into the Bloomberg terminal to get certified, it's also free because they know that you're a Bloomberg user. So therefore, they're not going to basically charge you anything for the certification. But if you're not a Bloomberg user, they charge you either $149 or $249 for the certification, which you do all on the web. But the whole point is, don't do that. Free, zero, okay? And then the final point is you put in a class code. There's a class code, which is also on the Google form. And for those of you that have been talking about what Google form is he referring to, here is the Google form that you click on, which in this Google form, there's the link for the sign up telling you to use the UMD account. There's a little video explaining how to do this. And when you go through, that's the class code, okay, with the instructions. So hopefully all very clear, but the point is you go to that site and so you can simultaneously do this while you're requesting access to start the Bloomberg terminal process. You can also sign up for the BMC certification and start that process even before you get your terminal access. And so back to deadlines. Friday, February assignments. Bloomberg certification 12th is when you have to finish the certification. So 12th February, finish the certification, submit the certificate showing that you did 70% or greater. Because when you do log in, and I'm going to log out here, and I'm going to log in here. These are the 4 modules, okay? And when you take the modules and you have finished the modules, it'll give you a percentage right here telling you what percentage you got correct. And you have to get those 4 modules with 70%. So this is the screenshot that you're going to need to basically submit, okay, to get your Bloomberg certificate. It's called BMC, right? So with all that aside, let's go talk about some content. Lecture note 1. All right. So this is called 4 Cornerstones of Value Creation. So this is kind of, think of this as a summary of the themes that are in the 7th edition of the valuation textbook, because a lot of what we're doing is based on McKinsey's work. They've done a really good job of organizing all of the finance content in a very practical way that the boards and senior leaders of companies use in addition to Wall Street. So 4 themes. Number 1, can't create value unless you have a positive spread. You learn that in Finance 101. Basically, to get a positive NPV, you have to have an IRR greater than your R. All right. Well, the same is true in the real world. The only difference is language. All right. So basically IRR has been replaced with ROIC, the return on the invested capital. And the R is the WACC. And so the difference between the two is called spread. And basically, the next screen for a second. That is one of the key value drivers, but spread is important. And the other part of spread that matters is half your spread is the industry that you're in. So great, academic, talk about it. Let's go back to the real world. So share my Bloomberg terminal again. All right, somebody give me a company. Any company, any industry.
Apple.
Apple, great. So in Bloomberg, you type in APPLE down here under securities. That's their ticker symbol, US equity. So click on that. All right, there's their show price. The important screen that you're going to learn to use a lot this semester is called RV. It's down here. It stands for relative valuation. This is where you can compare companies against each other, doing what's called comparable analysis or benchmarking, as it's also known. So by default, it's going to give you a bunch of Apple's competitors, right? Now, under here where it says comp source, I can switch this. And what I'm going to switch this to is the analyst curated. So basically, these are the ones that Wall Street uses. And then you can see the different subsets of the marketplace. There's only 3 companies in that list. So I'll switch to this one, which is the best fit algorithms. This is where the Bloomberg algorithm actually puts a few more companies on the list. So you got a bunch of tech companies. But here's the point. They have these predefined data templates by tab that you can look at. But what we're going to do is we're going to go over to custom, and we're going to create our own data look at these companies. And where it says add column, it's going to say, what column of data do I want? Well, I want to look at ROIC, return on invested capital, which is basically how much cash profit a company generates per dollar of investment on an annualized basis. I'm going to select it. It's going to say, which one do I want? And I want the one as the latest filing. And then I hit enter. And Apple's at 28.2%. That means per dollar of investment, they generate 28.2 cents of after-tax cash profit per year. Now, the other thing that Bloomberg does, as the only tool that will do this, is it will give you a real-time industry average. That's the top line, market cap weighted average. The way you get this average is in settings, global settings, statistics. You can choose what statistics you want to have on there. The one I'm going to ask you to start adding is called market cap weighted average. So you're going to have to check that box, because if you don't check the box, it's going to look like this. But when you go to settings, global settings, and check that box, then the average is there. But I don't want to just do the average. I want to use the weighted average, because I don't want some tiny company distorting the average of my industry. So this is going to adjust it based on size. The other thing you're going to want to do is you're going to want to get rid of the top section, because by default, it's going to give you this annoying bar, which I find to not be helpful. Just a bunch of random data up here. Okay, and you can keep it if you want, but I don't like this annoying bar on the screen when I look at competitors. I want to see just the competitor list. So again, global settings, uncheck the show top section, close. Now this is a per account setting, but here's the point. I then go to add column and I type in WACC, and I now, for my account, have, WACC, I forgot the ROIC, go back to ROIC, latest filing. I can drag it if I want to put the one on the left. So I got my ROIC, I got my WACC, I got my industry average. So right now, the industry average WACC calculated in real time today is 8.4% WACC, 28% ROIC over the last 12 months, based on the latest filing. Apple's borrowing at 8.61 today. They're making 28.2 over the last 12 months. Is this an attractive industry? What do you think?
Yes.
Considering that the spread is significantly positive, yes.
Exactly. See, it's not that hard. This is easy stuff. Okay. So we can see it out in the real world. So I'm going to keep this template. So what I'm going to do is I'm going to come over here to this little gear icon here. I'm going to hit save. And you see this menu bar. Yours is going to be blank, but I'm going to say this is my template. So spring 443. Save. Now, one click, this save template shows up for any company. So give me another company. Let's see another industry.
Berkshire Hathaway.
Burke. Hardest part, spelling the names right. All right, Burke, US equity. Conglomerate, curious what Bloomberg throws as their competitors. It's putting them in with financials. Okay. They are not calculating an ROIC right now. Don't know why. So they're missing a data point. You have to probably investigate. So sorry, give me another one.
Can you do Peloton?
Peloton. Is it Pelo? There it is. Here's Peloton. Okay, so they're borrowing at almost 9 and they're making 2 and they're worth $47 billion. Gotta love that. All right, industry unattractive. Kind of like Yeti though. Look at that, 23%, borrowing 13. Anyhow, so this industry kind of sucks and Peloton sucks even more. At least based on historical. We'll come back in a minute and talk about the future. Anybody else you want to look at?
GameStop.
They haven't made money. They're not expected to make money for 2 years. That's one of Wall Street's problems with them. And they're in an industry that it's kind of not doing well at all. Versus Merck. Yeah, their vaccine didn't work, but Merck is still doing pretty well in an industry that's doing pretty well. In fact, Novo Nordisk is doing really well. They make diabetes pens. Versus, say, auto, here's Ford. So it's easy to say that about half the performance is the industry that you're in, but it's a lot easier to see in the real world. That's what I'm saying. If you look at the automobile industry, this industry is really struggling right now. And with the exception of Ferrari, where they're selling $250,000 cars, like who's doing well? And the answer is no one, because the industry is so bad. And so that's the point. Like academically, the book talks about half your performance is your industry. Well, here's the idea. Exactly plays out in the real world. That's why we're going to do industry analysis, because it's not just about what the industry is today. It's what the industry is tomorrow. And when you're in pharmaceutical, the industry is far more forgiving. When you're in auto, it doesn't matter how well you do. You can't overcome. So that's actually the whole first section of our class is understanding the external market and the EIC. Okay. Point number 2 of the 4 cornerstones, I'm just going to stay in Bloomberg, is it's about cash flow, not net income. We know as finance majors, time value of money, and we know cash flow is more important than a piece of paper. Counting is just paper, right? And so we're going to spend our time in cash this semester. Cornerstone number 3, it's about expectations. Let's go back to Peloton. You can explain for Peloton how they become a $40 billion market cap company. I think $47 billion market cap. If they're borrowing at 9 and they're making 2%, that doesn't just lead to one of the most valuable companies in the world, much less in their industry. How does this happen? Well, there's 2 types of analysts on Wall Street. If you ever get a job, eventually they're all going to be replaced by computers. But for now, 2 types of analysts. Number 1, it's called the buy side. So in Bloomberg, to get to the buy side, you type in HDS, which stands for holders. And these are the institutional owners of a company listed from highest to lowest. So basically, Vanguard right now is the largest owner of Peloton. They own 6.66% of the company. They own 17 million shares. and they've been a buyer. They bought 2.3 million shares recently. This is 75% of their total shares outstanding are owned by the people on this scrollable list from Vanguard all the way down to, who's down here at the bottom, to Maple Lane Capital, which owns 1 share of Peloton. So here's the point. These are not the individual Robinhood shareholders. These are the institutions, but most of the shareholders are the institutions. And that's the point. What's going to drive Peloton? It's going to be FMR's Fidelity, by the way. It's going to basically be these buyers that trade big blocks of stock that really determine the share price of companies. And you can start adding up and you can see that about 30% of their shares are the top 15 holders, if you add up all these percentage outstandings. So these are the people that really are the most important to buy a company stock. But the problem is that, let's say I'm at Fidelity, who've been selling all their shares, and I'm at the Fidelity Global Innovation Fund, and I'm looking at this Fidelity fund, and I'm the fund manager, which has 109 securities in my fund at Fidelity with a $6.7 billion market cap. How do I keep track of all of these companies and what's going on with them on a daily basis and all of their competitors, especially if I'm going across a few different industries? And the answer is I can't. It's just too much information. So what I do if I'm Fidelity is I hire somebody, this is the sell side, an analyst at Wall Street who's a specialist, who's my consigliere, that tells me what I should do. So ANR is the sell side. And these are, oh, not for Fidelity, go back to Peloton. I do it from the stock that you're on. So go back to Peloton. ANR is what's called the sell side. And these are the specialists that work for the banks that write the buy, sell, hold opinion. There are 25, 27, 29 sell side analysts who write the buy, sell, holds. As of today, 25 say buy, buys are worth 5 points. 2 say hold, holds are worth 3 points. 2 say sell, sells are worth 1 point. On a 5-point scale, Peloton is a 4.55 out of 5. Wisdom of the crowd. They all put 12-month target stock prices, part of what you're going to learn how to do in this class, of what they think the share price intrinsic value is worth in 12 months. Bloomberg averages these. They throw out the outliers. The average share price is 155. So basically, Wall Street thinks Peloton should be worth 155 in 12 months. Right now, they're trading at 161. So based on what Wall Street's saying, you got a negative 4% return potential in the next 12 months. In the last 12 months, they're up 430%. So basically, if I just kind of look at what's been going on with the stock, if I owned it last year, I made a killing. But they're basically saying it's at the top. Like they don't see the stock price going that much higher than where it is right now. And so one or two things has to happen. Either they got to get less bullish on the stock, or they're going to raise their price targets again, or lower their price targets if they really think that Peloton is overvalued. But that's the point. Now Wall Street has to start to figure out what's next, but you can at least get a view of what they say. And the other nice thing that you can do is see these little locked Excel files. They're doing what we're going to do this semester. So Mario Liu of Barclays uploaded an Excel model forecasting Peloton, as do all these analysts. Now you have to have access, and they're not going to give us access because you got to pay for this access. But the point is, what Bloomberg does give us is EEO, stands for Earnings Estimate Overview. And this is one of the other most important screens we're going to use this semester. This is the future. This is a real-time view into what Wall Street thinks the next 4 years of a company are going to be. And the way this screen is created is it takes all the Excel models that are uploaded by the sell-siders and it averages them. And so basically it's a wisdom of the crowd, and this is called the consensus estimate database. So when you read about a company missing or meeting their earnings targets, both annual or quarterly, it's coming from this screen. So here's Peloton. Revenue last year, 1.826 billion as of June 30th. Revenue through June 30th of this year, 3.95 billion. 2022, 5.3 billion. 2023, 6.5 billion. 2024, 7.7 billion. So here's the point. People are not buying Peloton because they lost $1 billion. They made $1.8 billion in revenue and lost 11 cents of adjusted earnings or negative 80 million of operating profit. They're buying Peloton because they think by 2024, they're going to generate 7.7 billion in sales and make almost $1 billion of operating profit. And they're on track to make $1.3 billion of EBIT. That's what they're buying Peloton based on. This guess of what the future is going to be. And by the way, as an enterprise value to EBIT multiple on 2023 earnings, that's still pretty rich. They're trading at 68 times EBIT and 99 times sale or not, price to sales, EV to revenue, 7 times sales. Just getting closer. The S&P 500 usually trades about 5 times sales, but this is a very richly priced stock, but still based on the future. And if any of this stumbles in these growth estimates, and you can switch this to percentages really easily, like if they're not growing 30% a year, then their stock is going to fall pretty far, pretty fast, because that's the expectation. Okay. I can look at the same thing. If I look at GameStop, the problem with GameStop that Wall Street has is if you actually look at their growth, they're not growing, they're shrinking. Like last year they did $6 billion worth of sales. This year it's $5 billion. Okay. And they're not expected to make money the next 2 years. That's what I said. The professionals are looking today. That's right. It hit daybreak on Bloomberg. Like somebody's manipulating the stock because you don't become worth as much as GameStop does when you're shrinking and losing money and not expected to have any growth trajectory into the future. So this is just pure manipulation. And at some point, they're going to come back. That's why GameStop, if you actually go to their holders, to get a sense of this, their short interest is 102% of the total shares outstanding. Just to say it again, 102% shares are short. So that's what's happening is that somebody has orchestrated what's called a short squeeze on this company. And at some point, this is going to play out. And when it does, the stock's going to fall pretty far, pretty fast. But in the short term, people like me saying this have gotten destroyed because somebody's manipulating the stock. Okay. So this is market manipulation at work, but long term, like the fundamentals don't support what's actually happening here in GameStop. These are the types of things, by the way, when you do start your Bloomberg trading competition that you might want to look at in terms of ability, because you can short a stock as well as go long on a stock as an opportunity to consider here. But again, this is back to cornerstone number 3. It's about expectations. And so this is the one most important thing about this class is through the Bloomberg terminals that you use, the one insight you get that almost no business school student anywhere in the world is getting is a view of Wall Street's future of what these firms are going to do. And so if I'm talking about Microsoft, which is about to report earnings, that's their debt, MSFT, there we go, MSFT, there it is, equity. So here's Microsoft, corporate events. This is the event calendar. So Microsoft is going to report earnings on January 26th at 5:30. Okay. So that's when they're going to release their earnings. This is the conference call number that Bloomberg will have here. So if you want to call into the earnings call, it'll have the dial-in number and the PIN here as part of this webcast to basically be unmuted. But the point is, this call will also be recorded. But in real time, this is when the call is going to happen. So let's come back. Then what I'm going to do is I'm going to go back to EEO for Microsoft. I'm going to look at the earnings estimates. So when they report their earnings, I'm going to switch to the quarterly numbers. For the December 31st quarter, these are the numbers Wall Street's going to be looking for. Let's minimize the screen to see all the numbers Wall Street's going to be looking for. So here's the point. They're going to be judged on how they did against these numbers. And very quickly, that's going to move the stock. because it's about performance against expectations, right? And the final thing that I'll mention about Microsoft's numbers is if I go back to EE, which is earnings estimates, one level up from EEO, I can actually get a sense of how Microsoft has been doing. And so they have beaten their earnings targets 8 out of the last 8 quarters. They've beaten their revenue targets 7 out of the last 8 quarters. Beaten their EBITDA targets 8 of the last 8 quarters. So when I start looking at what they're going to do, to be honest with you, if Microsoft just comes in right at estimates, then that might actually be a problem because they actually have a history of beating estimates. And this is the game that people start playing when companies actually report the results. But again, you can start seeing this and see how people are looking at this as you start to get certified. By the way, the fourth cornerstone we're going to talk about is something called competitive advantage. If you're doing really well, and Microsoft's an example of a company that's doing really well again, you don't do really well forever. So how long are they going to do really well for? That's the other thing that we're going to get into during this semester. And so those are the 4 most important themes that we're going to talk about, except we're going to put it into a real world context. But all of this requires some steps on your part. So where do we leave today, Monday, January 25th? Number 1, if you don't have the book, get the book, start reading some of the chapters. I'm going to assume you read the chapters. Again, I go back to preach it like adults. If you don't read the material, can't stop you. But if you don't read the material and you can keep up, you're fine. But if you don't read the material and can't keep up, I'm not going to stop and slow down. You got to ask questions. I'm assuming you're paying attention, keeping up with the assignments and the readings. Number 2, first homework assignment is due next Monday. In order to do that assignment, you will need Bloomberg. We'll talk more about it during class on Wednesday. So where I stand today, Beyond the Game, the book. Number 2, if you haven't gone to that Google form link, go to the Google form link, make your request in to get your Bloomberg certification. I'll quickly today get back to you to then go back to that link and then finish access, create your login, get your BMC login, free one using that UMD email, start the BMC certification process so you can start to understand how to start doing some of the things that I've talked about and working on your assignments. And then Wednesday, I will put you in teams. Okay. No homework yet. The first homework's due on Monday. Any questions before we wrap up today? All right. We'll see everybody on Wednesday. Have a good day. Stay safe out there.
Thank
Thanks,
you.
Professor. You too.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Here.